And look at Japan.
Japan also want to
Stock
keep their
went
own.
up, right? Went up, break new high, and US fund went inside. Warren Buffett led the way. India, same thing, right? Oh, we want to, American business is going to open up. You see the narrative, how it shapes the capital fund flows is the ultimate power of the West.
Maybe you want to start off introducing yourself, our audience that don't know you.
Well, I'm Cecilia Tan. For those who know about REITs, hopefully you also know about me. I am now the CEO of Cesareit.
Hi, I'm Alvin, CEO of Dr. Wealth. We are a financial education company. So happy to be here to talk about, I guess, China in today's focus, right?
Yeah, you have been
Very
synonymous with
happening.
China.
Yeah, I don't know why.
Yeah, I don't know.
Is it because I'm Chinese?
Your jokes need to improve a bit. Okay, but I let you go. But what's happening so far in China?
Happening, right? Because we saw the Chinese equities, which was already quite low, went down even more. Just a few days ago, I think Hong Kong down like 4-5%, right, in a day. So I guess really a lot of investors have been patiently waiting. Those less patient one has already got off the bus. And I guess after 3 years of negative returns, right, once the GDP results came out, which probably didn't please some people, and probably they dump it and cause that sell down. So it's really happening. I guess a lot of attention has been on China this week.
But recently there is a lot of chatter, right?
Yeah.
I mean, I was doing a workshop the other day, and someone also asked me, so how should I continue to hold these Chinese companies, right? Like fundamentally, blah 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 blah. But the stock is not it's not reflecting. It is a shit show, right? For many years, right? So what's happening and all that jazz, right? Which is why I wanted to bring you guys in to talk a little bit about this Chinese consumer, what's happening, because that's also a big part of the narrative out there, right? Which is like, oh, the Chinese consumer is going to save the day, right? Like you need to get them to spend, you need to get them to come in, although I do think that's a very Western view of how economies work, right? Which is consumer leading the spending. But China themselves also has said that, they cannot just do export oriented anymore. They want to do more local consumption. But it seems a bit mixed message at this point in time, in a sense of like the data don't really show that Chinese are really consuming. So I ask you guys to talk about it, right? So anybody want to take a jab at it? Like what's happening with the Chinese consumer?
So I'm surprised that you said the market got disappointed. I mean, China set target GDP 5 and then they outperformed 5.2, right? So a lot of people didn't understand how big China is. China is second largest economy in the world. Just by a little bit, it will move a lot.
Yep.
So at that level, 5 to 5.2, come on, Singapore, I think we are going to be 1% GDP growth in 2023. In the small company, small economy base, right? So I think we need to put in perspective. So I think part of that is, I think people expect China to perform miracles. But what actually people didn't realize, China went through that very difficult patch because, Cesareit, for those who follow us or those not familiar, we operate outlet malls we own outlet malls in China operated by our sponsor. And our sponsor is one of the 数一数二 outlet operators in China. They are by far, right now, I'm like counting where they're going to open more. 17 already and plus. Okay, this year 2024 they're going to go to Urumqi. Okay, I think the fact that my sponsor is still continuing to expand the footprint shows that there is something out there in the consumer space that they are very optimistic despite all this. So coming back to China, because China after the 2022 Qingling, of course, didn't happen. When they reopened in 2023, I think everybody expect China to save the world, like you say, right? Well, Superman must come already because the superheroes must come.
IMF also said it, right?
Yeah. But of course, when China didn't deliver, then everybody will start bashing China. But the reality is that, it's like in 2022, they went into ICU. They were like so sick already, like they need a space to recover. And I feel that 2023 was that recovery space. But of course, I think 2023, a lot of that consumer sentiment has been weighed down by the property crisis. That indeed, the property crisis is very severe. I made a few trips to China in 2023. When I went there, a lot of people, really the hot topic was talking about property crisis and how it was so gloom and doom. But, life needs to go on. Okay. So to your point about consumer spending, what has happened, and in our business that we operate, we see actually the weakening of the consumer spending started in actually 2Q 2023. Because after the first Q, reopening and Chinese New Year, people so happy going back to physical store, right? I think the reality starts to set in 2Q, 2Q3 because the property crisis continue to deepen.
Yep.
And the property crisis also brings about a range of other effects, job loss, because the property developer has vendors, suppliers, and they all don't get paid. And a whole string of, indeed, there were business failures. And some of this were not reported out here. The SMBs also suffer. Like, for example, all the building materials, all the home appliances, nobody is going to buy them, right?
No house, where got aircon, right?
Yeah. Okay, so obviously, but with the Chinese consumers, I think they also adjust. What they now adjust to what we call 理性消费. Okay, so 理性消费, then people will also say 消费降级. It's true. We saw that in China. But that means there is now a greater focus on value. Yeah. And they want to still maintain their level of lifestyle, but they don't want to spend too much money.
Sound like Singaporean going to Johor.
Exactly. So, this is a very natural reaction for anybody who are facing what you call uncertainty. Okay. But interestingly, if you look at the unemployment rate in China, I think overall I think it's about 5%. It's actually not too bad. In 2023, everybody will just focus on the big number, that 25% of unemployment in youth. But come on, China got a lot of middle-aged people, not just the youth. The youth don't run China. It's actually the middle-aged people. They are the ones running China, spending. So, these people generally, at least in the tier 2, tier 3 cities where we generally find that it's not so bad. It's still quite stable.
Okay, interesting. So this ground up experience, yeah. Elvin, what do you think on your end? Like, how are you evaluating the Chinese consumer?
So there's definitely a lot of things to unpack, and I agree with what Cecilia mentioned. It is at first an expectation issue because people expect China to be growing like 7-8%, and when China set a target 5%, so low, right? It's a bit anti-climax, and that's where people start to, are you in trouble? Start to have that kind of negative thoughts about where China is heading. And I guess once that expectation get bust and reality sets in, as well as the property crisis that we talked about, I believe that the bubble has to be popped. Because the property bubble has been around for, decades.
Yeah.
It's just waiting for a bad guy to do it. And it just happened to be the current president to press it further. Is there a better time to pop the bubble? Maybe there could be a better time, not just right after you reopen and then you go and pop the bubble. Probably there would be a better timing to delay it a year or 2 years later when the economic growth could have sustained a bit more. I think that probably, of course, we won't know what the true impact will be. So I guess a lot has been done with the expectation and mixed signals when they say that we are open for business, then at the same time they are pushing through some of the regulations as well. And they also did a rewind of the policy where they imposed on gaming companies, right, just last month. So I guess a lot of that mixed signal also make a lot of foreign companies felt that, hey, should I be in China? I'm just not sure, right? And if I want to play safe, I just excuse myself from that place. So that foreign direct investments disappears, you see, or reduced. And a lot of the stock market, now we link to the stock market, right? A lot of the stock market, I believe, even in China or anywhere outside of the US, right, is predominantly driven by US fund flows. Because you look at the largest hedge fund in the world, the largest ETF, largest mutual funds, they are all in the US. You look at top 50, right? I would say 90% in the US. And Asian markets, emerging markets always have this problem. Whenever the story is nice, the fund flows go inside, push out the share price. And then when US have any issues, they'll pull the money back. And Asian markets, emerging markets will fall. This has been the pattern for the last 20, 30 years. And it's not going to change until US dominance in this fund flow disappears, which is not going to happen soon. And with the geopolitical tension within US and China, you don't expect the US funds to be flowing into China that well. And hence, 2023, we saw the fund flows, outflows. In fact, the outflows have been for 3 years and counting. And hence, I don't think the Chinese stock market can recover until the fund flows return.
It's very interesting to mention that because I was just chatting with somebody, with these geopolitical tensions, a lot of these funds, if they got anything China, they are forced to sell. So if you think about it, it's not driven by the fact that they don't believe in China, but now because there is this, US thing that they don't want to have anything to do with China, it actually accelerated the outflow. But coming back to the point that Alvin made, actually the property crisis, I remember because I came into this role in August 2021. It was around that time they started to implement the 三条红线.
Three red lines.
Right.
Yes.
So it was actually before the COVID era. But I think what China probably didn't expect, the COVID was so severe. COVID was actually quite stable in China in 2021. Okay, so China economy, I think they grew 8% Yeah. So because of the expectation of 8 or something percent, right, people think that China is going to maintain that level of momentum. But of course, in 2022, we have the Russia-Ukraine war that erupted, and then suddenly the COVID became very infectious. And China was scrambling to try to contain because, the government always got this policy, the health of the people is the most important thing. Because
Chinese
of
people
this,
think.
so it's driving their way they manage the COVID.
Yeah.
Of course, now when we look back, of course, we can always say where they've done wrong, where they've done right. But personally, I think they paid a very high price. Okay, it paid a high price. It has damaged a lot of confidence in the system. Okay, and I must say, after that, consumer confidence, business confidence became very fragile when they recovered into 2023. And then, this kind of thing, the property crisis continued to deepen. In fact, it deepened even more in 2022 because, nobody can construct, nobody can buy, nobody can do anything, right? So I think that crisis will continue to evolve. But I say people are already now priced in. They already know that this thing is not going to, recover soon. People got to adjust. The people in China, they are very adaptable one. When I go there, they are one of those most sophisticated and most savvy people. As a consumer, they know how to pivot, right? So even in now 消费降级, I was just chatting with Reggie. Names like Pinduoduo, right? Wow, doing excellent business.
A few years ago, Pinduoduo was like a cheap place, right?
Yeah.
You go buy all the cheap.
So clearly, I think they are also now trying to use this consumer market to drive, because now they know the previous pillars of economy, like the property, direct investment, because of capital flows, they are not coming to China. Even exports is very weak. I feel China is going through a structural change now. They try to be more and more self-reliant.
Yeah.
And self-reliant, they also hope more and more of this consumer kept their spending within the country to support all their economies and industries and businesses. So in fact, we are benefiting from this, the outlet business, because actually in our outlets, right, we sell a lot of domestic brands.
Guocao.
Yes, Guocao is a big thing in China. Increasingly,
yes.
I think all this Western bashing is no good. It also make all these young people in China, have a very negative view about the Western brands, right? I mean, you have had boycotts of Western brands. Increasingly, these young people, they're also beginning to feel that they have to support the economy. And in fact, I think also to that point, actually a lot of their local brands, their design is very good. And the price point really give you value. So I feel this consumer market, right, in China, they really have legs to stand. Because we see that in our business. Like last year, of course now I'm in blackout. So my results will come out next.
Cannot say yet. Stay
but I
tuned.
can talk about historical.
Yes.
Right. So if you look at 2023 for the 9 months, just for our 4 outlets, our sales went up by like 19%. But for the same period, our sponsor, their overall sales went up by 33%. I think those numbers really speak about even more 理性消费, they want to come and really look at value proposition where they can get reasonable, affordable luxury, I would say.
Yeah. It's true. I mean, when I was staying in China, right, I also buy Anta. I also buy Li Ning, right? Because it's the same thing as Nike. It's pretty much, right?
Yes.
Like they come from the same factory, or maybe in the same area, or in the Putian area anyway, right?
Yeah.
So they all come from there, and then the fabric is the same because it's part of the production cycle, right? You want to manufacture for the big brands.
They source everything locally.
The source is all there, and then all the other side brands, they just kind of create along, and then they establish their own thing, right? So it's quite interesting. And I think Alvin previously came on the show, also talk about some of these consumer brands and the strength of them. Are you still on that ground? Like, do you still think they're strong fundamentally and all that?
Fundamentally, I definitely think they're strong. But you look at their share price, they look them weak.
Exactly.
Right? So,
exactly,
so there's a lot of this thing. And I guess where Cecilia coming from is that there is a drift in consumer spending towards the lower price item, more price sensitive as compared to the past. But overall, if we really take a look at China's strategy, right, which they talk about dual circulation, right? Don't rely so much on export. They also want domestic consumption to drive the economy. If we look at the numbers, right, about 38% of China's GDP is driven by private consumption. And that probably includes some property. And we take in that means it's even lower, right? And in the US, it's more than 60%.
Yeah.
So that's almost double, right? And hence, US economy is a favorite for a lot of businesses because they spend money. Right? China, the spending power is still not there yet. I think it's also linked to the GDP per capita. Even though China GDP is large, right? But the per capita level is not high. It's about $12,000 a year per person. In the US, it's about 60, 70,000, right? So 70,000 probably. So it's almost 6 times more. And hence the Chinese consumer, if you want to really rely on them to power the economy, right, the GDP per capita has to go up. Because if they don't really have that money to spend, means they don't have money to spend. Even you try to advertise, you try to encourage them to spend, they just don't have money to spend, right? So the target is by 2035 to about 20,000 GDP per capita, and that's still 3 times lower than US. And by then, US probably increase further, right? So they have a big gap to fill, and I don't think this relying on consumer itself can help China out of that current economic, to drive China economic growth. I think the export-oriented kind of economy is still necessary. But given the geopolitical tension, US also don't want to buy so much from China. Hence, China become the number 2 trading partner, and Mexico have overtaken in 2023. So I guess that is where I think China is having to contend with a lower GDP growth rate, at least for the next few years, right? But even though we say low, right, 5%, 6% is not low, right? Just that, again, expectation, people expect it to be faster. And I guess that is going to be the case due to the restructuring going on within the economy as well. It's going to take a long time. I don't think it's an easy to solve issue.
Yeah, I totally agree. So it's very interesting you mentioned about US being a consumer driven, but by the same token, you look at savings rate US is one of the lowest, because I think culturally, like, they always have this habit of, spending.
Yeah.
But if you look at it, the statistics in China is very interesting. Okay, it's not that they don't have money, but because China actually have a lot high savings rate. I think it's a very
Chinese
Asian
thing. Singaporeans also very high savings.
Yes, correct. So I was just looking at some statistics. Actually, in 2008, the China national savings rate is about 52% of GDP. Now you think about it, that means they lock up a lot of money.
Yep.
And I feel that time because they save money to buy properties. I think that's the main driver.
Yeah.
Okay, but still, even in the sort of lower economic growth, in the last few years, since 2019 until like 2022, their savings rate still hover around mid-40s to a high 40s. So if you think about it, actually, there is this latent pool of money that if they really come to realization, 我下次不可以买房子, you think these people will then just keep saving? Because now they're also dropping interest rate. So it doesn't pay for them to keep money in the bank, right? So the government is also trying to force people, rather than you keep the money, it's going to get eroded by low and low interest rate. Then, you do something. So what we are also seeing that people are also thinking about investment, like 理财产品, okay? And part of that is also, they will also consume. But what we have also seen is that the big ticket items are no longer on their radar, but they will consume for their own, like luxury, like F&B. They will still buy, branded goods at a discount, like come to our outlets. I think you're right, Alvin, because I think fundamentally China has never had a very strong consumption growth as a primary pillar. But now because of the structural change, they are trying to move that. I think it will take some time. But the important thing for China consumers is that confidence. So I think no matter how, they need to do something about the economic prospects for China. So I think if people feel that, okay, China economy is going to be stable and then the government is not going to flip-flop with their policies, people, I think they will be more prepared to, spend more. That's our sense of things on the ground.
Or China need a CPF. Extract the money and then invest as a nation.
No, because of this also, because the other thing is, of course, a lot of this Western country, their social welfare system is very robust. So actually those people don't bother to save, right? Because everything you go, you get free. But China, actually, their social benefit system is not comprehensive. So they still need to save money for their own retirement, some health benefits for themselves. So in a way, we are not so different from China. In Singapore, even though we have CPF, but that's still our own money. So I think that thinking is always about how I prepare for the future, right? For rainy day. I think that is a very Asian mindset, I feel. Yeah,
definitely I agree. Culturally, there is an impact to the savings rate. Peter Thiel did say that the Chinese are a pessimistic bunch and the Americans are the optimistic bunch, right? So the Americans will be like, don't worry, just spend today, we think about it tomorrow, right? Everything will be good. The Chinese are like, hey, you know, what if something bad happens tomorrow? I need to save for rainy days. Yes. And culturally, you also have stories like, you know, the Sai Wong Si ma, right? Even during good times, you must think of bad times that can happen. Your pot of gold you cannot use now, better save, right? So that also has that culturally curbing consumer spending. And hence the saving rate tend to be high. And yes, they probably wanted to save for property. Now they also don't dare to buy.
Yeah.
And I don't think they are like so optimistic to also put in wealth management product. Maybe some of them would, right? But probably predominantly they will still feel like not the confidence is not there. I look at the stock market keep going down, 3 years down already. Who dares to buy? I just put the money in the bank. Interest is low. At least my capital is protected, right? So I guess that is that very pessimist, culturally kind of Chinese population that we are looking at.
Interesting. Okay. I like it that there's a very clear difference between what's happening in the real economy with all these brands and all these consumption patterns and also like the fund flows coming in, right? Because ultimately for a lot of Singaporeans, they are not thinking of going to open a shop in China. They are hoping to see if there are good shares or things that are related to China that they can buy off the exchange, and then they can make some returns there, right? So within these two tiers, we address the first one with clarity first, right? So the first one, which is the fund flows element side of things, given what you are thinking of, you think that there's no quick turnaround for this, right? Just for clarity's sake.
I'm not saying that there's no quick turnaround. The power of the West is that they control two things. One is fund flow, the other one is narrative. Because you have Bloomberg, you have Reuters, majority of
all the elites news speak English.
Come from the West, you see. So it's very interesting, even in the recent GDP report and economic indicators that was released by China, you will realize that Western media focus on the lack thereof. The glass is half empty, right? And if you look at the China media, the glass is half full. The problem is, yet most people will read the Western media, which they get a half glass empty kind of narrative. And with
that's why we are here.
So with the negative narrative, right, that's going on, and plus the fund flow is pulling out, you have two perception that's working for or against China, right? One is that China is uninvestable. That's the narrative. The second is it's true because the stock market is going down, right? It's very powerful. How are you going to battle against that? So in order for China market to receive the fund flow back, right, the narrative must change and the funds must really pour inside. I'm not saying that it won't happen soon. I just don't know when. But I do think that these are the two critical things that must happen before China stocks can go up.
Yeah, I totally agree with Alvin because we have been the direct victim of all this Western.
Always kena.
Yeah, even though if you look at fundamentally when we report our numbers, I
work so hard, also know you always kena.
Our sales are very strong. So because the stock market is very driven by sentiment, and people react to what they read, but reading sometimes will influence your emotion. And then you go and talk to all your friends think the same way, then you say, they must be right. So I think therein lies that disconnect between the real economy and stock market is always forward looking, but is stock market always correct? May not be. Which is I think sometimes in this, then you think about, 危机当中有机会. Okay. So I actually recently, very interesting, a lot of people come and ask me, 是不是可以买中国股票了? Because it went down to some bottom. I mean, my feel is that you have to look at the right stock pick. Right? As with all things, even the boom market, you need to think about how much patience you have, because I agree with Alvin, it's not going to be a fast turnaround. You need to have some level of patience capital in there to ride through. Okay? Because anything that go down so much, at one point, Newton law will tell you must go up. But you see, for our business, we always focus on the fundamentals, because if you are so guided by stock market, you're going to be really misguided. Because there are too much noise in stock market.
Fair. So I just want to get one clarity here, right? So in other words, the local capital, which is like China, maybe Japan, Korea, or even like the Southeast Asia capital, is not enough to reboot the Chinese stock market in that sense. You know what I'm saying?
It's not enough. It's unlikely the Japanese will invest in China. It's also unlikely the Indians will invest in China. Right? And look at the narrative. The narrative talk about Japan is moving out of deflation. And look at Japan.
Japan also want to keep their
went
own.
up, right? Went up, break new high, and US fund went inside. Warren Buffett led the way. India, same thing, right? We want to, American business is going to open up. You see the narrative, how it shapes the capital fund flows is the ultimate power of the West. It's not military might. They don't need that. They don't even need to use a missile. They can just write the storyline and move the fund flows. And they can create realities or at least perceptions that works for investors. So I guess that is why Japan and India appear to be coming up. Right? People talk about, India is the next big thing. China is going to be number 3. India is going to come back. You can see how they shape the narrative is very, very powerful. It's very brilliant, I would say.
It's true. Yeah. It's very interesting. But I would say the missile is still important. Of course, because the baseline military not strong, everything on top is fluffy.
The substance must be there.
Substance must be there.
Then you can play the form, right?
Exactly.
But whether see more geopolitical tensions now.
Exactly. Right.
But and all this like mini breakout of wars in the Middle East. Iran going to attack Pakistan.
It's true. It's true. But that's a different discussion.
I would say is because of the rise of China. So when the US power seems to be diminished a bit, the mice come out to play, you see. Because the cat not powerful. The mice come out.
I like the analogy, the cat not powerful.
On the stocks, on stocks again, right? I would say that there's still pocket of opportunity. Like let's say, maybe the wait can be long. But if you focus on fundamentals, there are still stocks that can give very good dividends. Look at the dividend yield in China is crazy. You can close your eyes, you pick a stock, you can get 8-9% or even 10% dividend yield. And you can see the dividend has been increasing, even though we talk about economic slowdown or what, right? They still increase the dividend, right? So I guess if, especially for Asian investors, I guess the focus on dividends, which is related to fundamentals, is more important than you focus on capital gains, which is dependent on the share price, right? So if you're happy with the dividend, right, you don't care about how the share price moves. You don't need to check the stock market. You don't read the news. You just make sure the company fundamental is still strong and you collect your deep streams of dividends continuously.
Thank you. Exactly. That's what REIT is supposed to do, right? To give you that long-term stable dividend.
I feel like today is
above 8%.
I feel like today is sponsor episode. But okay. So we get that top line out of the way, right? So now let us talk a little bit about like where are these like growth areas, at least within the consumption economy, like what's happening in the different spaces in China, right? As much as we say that the Chinese consumer needs some time to spend and all that, to grow their income, I'm sure they're already, spending, right? And I want to kind of have a little bit more insight on their spending habit. Where are they spending? What's happening?
Hey, welcome to the Financial Coconut Podcast Network. I'm your host, Reggie, aka your Chief Financial Coconut. And if you're loving what we're creating here, like, share, subscribe, share with your loved ones, comment in the comment section below. And we'll see you for great content on Chills with TFC.
I just saw this from China. This was published on the 18th of Jan, very recent. 中国奢侈品报告. Okay, so this China Luxury Report. It actually says that in 2023, 中国人奢侈品消费破1万亿. 2023, right, where, all the consumption downgrade. The luxury segment in China is still forging ahead. Okay, so a lot of people felt that, consumption downgrade, that means all the luxury goods, like the Prada and Gucci, nobody's buying. But interestingly, I was looking at what this report suggested is the 中国人全球奢侈品消费增长 in 2023 is 9%. So I think that China is a very big market where the consumer segmentation is actually very diverse.
Yep.
Right? I mean, the luxury end, these are people who are like price inelastic.
They are very rich. They are the very rich tier.
Correct. So, I mean, for them, lifestyle is everything about, having that association with the brands that they are familiar with.
And 面子.
Correct.
Chinese, they're willing to spend for 面子.
For clarity's sake, 1万亿 is 1 trillion.
It's a staggering number, right? I mean, if you think about 2023, because China didn't really open up, so all these people got to start buying all these luxury brands within China. So it's a very smart move in a way, right? Because otherwise, a lot of these tier 1 city people, they like to go to Europe, US to buy all the luxury brands. Yeah.
So for clarity's sake, right, is this luxury brands? Are we talking about like foreign luxury brands, that have opened up distribution in China, or distributions are a bit cheap, flagship in China that all these Chinese people go and buy? Or is this $1 trillion flowing into like local branded luxury? You know what I'm saying?
Based on my observation on, say, LVMH results, right? So traditionally, they have always been going like in the teens, 10% per year. And definitely Chinese consumer is a very important driver of their growth. And their latest result is that you started to see their revenue growth dip below 10%, right? In a single digit. They are still growing, high single digit percentage. In Asia ex-Japan, in Europe, right? They have slowed down. Japan has maintained, likely because a lot of Singaporeans go there and buy. And I guess because why Europe and Asia ex-Japan, right, is because those two markets are predominantly driven by Chinese consumers, right? Chinese also go to Europe to buy.
Yes.
I remember I went to LV shop in Barcelona. I went in, I thought it was a China shop. Everybody was speaking Putonghua.
I get it.
And they were just Chinese, probably 90% of them, and the other 10% is Singaporeans. There's no foreigners, no Caucasian. And you look at LVMH growth numbers in US is low single digit. Right? So you can see luxury is mainly driven by Asians.
And to be clear, you see a lot of the advertisement now already, the face all is Chinese. Right? All changed already, right? A few years ago it was still wasn't the case. Now all the front face.
All this, right?
And this is a reality check, right? From the brand's perspective, they need to reach out to the audience that they want to reach out, right? So this is where it is. Okay, that's very interesting. So that is the that's a luxury side of things, right? Your atas bag and all that stuff, right?
Hermes,
all those type of things, right? Okay. But what about the other verticals? Like, are there certain interesting verticals that you see maybe from your malls or from your studies, like where people are consuming, like what are the trends out there?
Generally slowing down, right? Generally, the revenue growth rate has slowed down. Like you have home appliances like media,
because no house, don't need aircon.
They used to grow in the teens. Now they are just growing single digit.
Correct.
Even Moutai, which used to grow at 20%, now is growing at 10, 15, 16%. So indeed, there's a broad slowdown in this revenue growth as well as consumer consumption. It's still growing, just that again, expectation is not met. Hence, the sentiment is not good.
Yeah. In fact, I started going to China in 2023. I made 3 trips there. My first trip after China reopening was in June. Okay. I still got to apply a visa. Okay. So I remember in Kunming, right, my colleagues brought me to a place to have dinner. And that whole street was full of shops that sell building materials. And it was very quiet. And then I was asking them, they said, of course, no, nobody buys houses. Nobody buys all this like building materials and all the 装修. 非常惨淡. Okay, but by the same token, during that period, we are still doing good sales. So you see, at the end of the day, 衣食住行, right? Right? 住, as long as you have a roof over your head, you are good. Okay. 吃跟行, these are like essential. Okay. So when you don't spend all this in property purchases, then people think about, okay, then maybe 我还是要过日子. But we indeed also see this consumer downgrade in our space because we track like average receipt per customer. Okay, we actually saw the softening in 2Q 2023 because we track that numbers very closely. Right, in China, the 大数据 is very powerful. So, for example, in the past, maybe the consumer come, they will buy 3 items, say 500块人民币. But now they think I still want to come, but maybe I buy 2 items, 300块人民币. Okay, so what we need to do is how do we 刺激消费 in terms of trying to give better value that they will still buy that 500, but maybe they get 4 items or 5 items. Okay, and the other thing is through this, we also lure in more consumers that previously maybe never thought of going to outlet for shopping because they never think that they are in the category that need to like save money, But now the reality bites are actually very interesting because in June last year when I went, I was talking to my group CEO who is like in charge of the operations. He said, 那些瞧不起奥莱的人都来了. Wow, that statement sums it all for me. Right? So we are seeing now the 理性消费 is now pivoting people, reallocating their spending. Okay. But they still need to feel, I still want to have a decent life. And this is like the middle class. The middle class, I think, is predicted to grow to a very large number. I think recently there was some survey done. It will still continue to be a strong component of it. And these actually are the consumers that we are targeting.
Actually, it's good news for Sasia. The consumer downgrade. They go outlook.
Yeah, they go outlet, strategic, right?
Yes.
Earning surprise.
Yeah, so, okay, tarik, we kena. Okay. Fair. But can we kind of get a bit sense of like in the F&B space? Like Hai Di Lao, some of all these other brands.
I didn't really monitor that, but I mean, we saw in the news or social media that there's a lot of domestic travel. In fact, domestic travel in China has surpassed pre-COVID numbers. Just that international travel is way off. And I guess that is also another sign that they are trying to save money, but without sacrificing their lifestyle. Right? I want to travel.
All go Yunnan.
They went to this small town called Zibo, right? It was like packed with people to barbecue. Because during COVID, there was a group of students who were very well treated there when they were trapped there due to quarantine. So they went back and then they somehow it went viral on social media. They just targeted a small town and it was booming with tourism. So I guess there is spending, just reduce spending. They are not trying to sacrifice their lifestyle totally, right? They are just trying to find ways to spend in a way that it is still prudent and they can get some enjoyment.
Yeah. In fact, I think there's also a survey by McKinsey recently, right? There is now, they see a clear shift in China consumers past few years to spend on services rather than goods. So services include tourism, F&B. Okay. I think the goods part, because usually last time was a lot of capital goods. But because that segment is now no longer.
Yeah, you don't need 3 washing machines.
Yeah, correct. 你没有3套房子,
你不需要.
Yeah, so interestingly, because of this, actually from our space, right, we actually also increase the service element. 客服 is very important because now people need to feel that they're getting value for what they spend. And they also want to be a bit more savvy and educated in terms of what they buy. Yeah. So interestingly, there is now the shift in consumer spending. Even in trading down, right? They are actually trying to buy discounted goods without sacrificing too much of the quality.
Okay.
So they can be an investment team, right? Those more budget conscious brands that could benefit from here.
Yeah. So you were asking about F&B, right? So interestingly, what we also have observed after China reopened, a lot of because our outlets the F&B component was never the major component. We were still very fashion oriented. But what we actually noticed, our restaurants and eateries were getting very full. So as part of our tuning last year in 2023, we actually in all of our outlets, we actually increase the F&B representation. For example, a very classic case in Kunming when I went last year in 2023, there is this F&B outlet in the 4th level actually went bankrupt. Went bankrupt during COVID because cannot sustain. Okay.
Of course, COVID. No
but actually then we actually changed it to a hot pot chain and put first day eating record high sales for the first day, right? So I think people will come if you have good F&B offerings. Okay, so I think this is where the merchants, the businesses in China, they now need to really think about what brands cater to what consumer. Like in our Hefei, right, we brought in a lot of like Hong Kong brands also, 避风塘. Also into our Hefei outlet because now people want to experiment also with F&B.
Interesting. Okay, so then with all these brands, right? I mean, okay, there's an investment theme here. It looks like there's something interesting that we can, you guys can dig a little bit deeper. Put in the comment section, ask us, right? If you have specific things you want to
examples.
It's like I don't know, like your coffee.
Mixue go IPO. Right, Mixue is supposed to be a lower tier bubble tea price. Right? Pinduoduo. Growing much faster than Alibaba.
Overtake JD.com.
Sasia does outlets.
不要再 plug 了，可以再 plug 我就要 send invoice 了。
I'm just giving examples, right? If we're talking about investment theme of the budget consumers.
No, and I wanted to ask about like Chinese brands lending overseas. Right? Because I think that is also a big thing, right? Maybe 5 years ago, a lot of American companies, or maybe 8 years ago, a lot of American companies, their main thing is enter China, right? Many of them failed. right? But now you also see a lot of Chinese brands exiting and trying to land, because they say, 国内很卷 right? I want to go somewhere else. So, and you see Mixue popping out everywhere, right? And is this something that we can continue to look out for, or how are they performing? Do you see some like general trend around this, that where Chinese brands are actually landing quite well, at least in the Asian market?
I used to do a slide to put all the China brands that are in Singapore. I ran out of space.
Oh, really?
Yes, I ran out of space. And I think this trend is not going to stop. It's just going to continue. This is the MNC effects. And typically how I see it is because big domestic country usually produce MNCs of the world. We saw that US done it for the last 50 years, right? For a period, we saw Japan did it, right? Then the Koreans, then now we see Chinese. Okay? When they have a huge domestic market, right? When any brand that becomes successful, the amount of revenue that generated is so much, right? And a part of this can be easily used for overseas expansion. As compared to, say, a Singapore company, you grow to that 5.5 million market, and then you say you want to go China, you go down there, you're still undercapitalized versus there are players there, right? And when they come in, they bring over their arsenal to this market, right? You can never beat them. And hence, you start to see them aggressively expanding because they have the financial powers to do it. A Singapore company just can't. Hence, you will start to see the presence will overwhelm a lot of the local enterprises. Some people will say, because it's unfair, blah, blah, blah. We need to have some trade barrier again. All the turf-guarding, geopolitical stuff will come in again. I think this is inevitable, right? You also saw China companies able to break into the US, which has not really been able to for a longest time, right? You saw TikTok, Shein, Temu, which is from Pinduoduo, right? So they have managed to carve a market for themselves. So it is a trend that I don't think it will stop. In fact, it will enhance. We're going to see more Luckin Coffee. We're going to see more Mixue. We're going to see more. Even
my
media.
friends love Mixue. It's everywhere. And
because it's cheap. I think the ice cream, right? $1 ice cream.
Like $1 ice cream.
Even BYD is expanding in Singapore.
They have one very nice showroom in Suntec.
Yes. But BYD distributor. Right? So it's a different structure.
But at least it's a Chinese branding.
But it's pushing. I mean, Dajiang, media.
And even
Hisense.
I was surprised, right? Like Haier, most people would imagine that it is a China brand, right? Mostly revenue in China, right? Actually, it's not true. More than half of their revenue comes from outside of China for Haier. Nice. Because they have General Electric in the US. They own that brand already. They have multiple brands in Europe as well as Japan. So they are MNCs even as of today. And their international presence is going to be stronger rather than weaker.
Interesting.
Maybe recently I was in a Jewel. Then I found this shop. I can't even pronounce the name. Julia.
Confirm China.
Yes.
Correct. Weird name one.
Correct. So I went in. When I look at the fashion, immediately I know it's China because I go to China a lot. I look at the fashion. But the price point is quite expensive. Okay, for a Singapore market. So you can see some of these Chinese brands. They don't think they're like they're like low class brand. They actually price at upper and above. So because this is the image they also want to feel, they want to bring to the world that China is not just a factory of the world, but China actually has something premium that can offer.
And you see in a lot of when I lived in Shenzhen, right, you see in some of those like shopping streets, right, some of these brands, they really use it as a space to like brand themselves and go further, and then they just kind of move abroad, right? So your 2线, 3线is a great place. A lot of these newer brands, whether the boba tea, Mixue, a lot of these brands actually they're not from the big cities. They're from the 2线, 3线 because it's cheap over there to develop a brand, to grow a business. You dominate there, then you attack the first tier city. Correct. And then you leave the country, right? So there seems to be a pattern there. It's quite interesting. It's quite interesting. Nice. Okay, so if that's the case, right, what do y'all generally think? Any last things you want to share about like the Chinese consumers, or like, because we see this disparate between the financial markets, the consumer, and of course the businesses, right? It's a multi-tier type of situation. So any last things you want to add for our investors out there?
I would say that if you really want to invest in China, you need to have the confidence that China will eventually do well. They will continue to grow in their supposed trajectory. Right? Although you may supposed right? I would say supposed.
A story is a story, right? Yeah.
So I would say if the time frame is less than 10 years, then maybe not. right? Because you really need to have that faith that it will work out at the end. And the fund flow thing is something that we cannot control, right? It really depends on how the big institution decided whether in or out of China. Hence, I suggest that looking at more dividend yielding kind of companies, some of them are still fundamentally strong, right? So you get the returns based on fundamentals rather than based on share price. That I guess would help soothe out investors' anxiety if you still believe in China.
Okay, yeah, but it's a lot of anxiety out there in the market today.
Yes,
Still a lot of anxiety. What about
so
you?
I mean, I wouldn't address from the investment point, but I think, in as much as Western bashing or whatever, I think people still cannot ignore China as a market by sheer size of its population base. I mean, recently they announced that they have like 2 million drop in population, but 2 million drop in 1.4 billion is like, okay. I think fundamentally we need to understand, China is actually a very big country. Sometimes the headlines do not do justice to China. And tier 1 cities, tier 2, tier 3, the demographics is very different. So for those who really need to understand China, don't just read the one source of information. I think it's important that you get yourself armed and talk to people who have been in China, done China work, Also read some China news. Of course, China news, people will tell me it's all a bit more managed, but still I think that will give you perhaps a different perspective, ground up perspective.
Yeah.
Then I think then you can make your own assessment about China. But sitting here as a CEO of Accessory, and because we're in contact with our China team, I can tell you I am still very upbeat about China. Yeah.
Okay, fair. Of course, if you're not, then it's a bit problematic, right? but before we end, can you just kind of like help us understand a little bit, since you talk about like tier 1, tier 2, tier 3 Chinese consumers are quite different, right? Can you kind of expand that a little bit for us to understand? So it's very interesting.
I was talking to someone who went to tier 1 cities when they just reopened in 2023. Okay, and then she was telling me, Shanghai is so gloomy. All the shops, nobody shop, and it's terrible. It's terrible. But interestingly, she said, maybe about 9 months later, she went back again, and she actually felt the mood is better. The mood is better. Okay, now I went to China 2023. I visited all the cities, Chongqing, Hefei, Kunming. I don't feel gloom and doom. Not at all. Okay, but when I talk to people, the few things that kept coming up is, 消费降级, yes. And then people worry, even those people who earn quite high salary like bankers, they also telling me that, I need to save more money. Okay, so I think that one is just a general response. But I don't feel the cities like doom and gloom like what my friend told me, because that time I didn't go to the tier 1 cities. So again, I think it speaks of the local economy and the spectrum. So because a lot of the FDI will go to the tier 1 cities first. So when they extract out of China, I think the impact they felt first in the tier 1 cities. But the tier 2, tier 3 cities are driven a lot by local industries, local economy, right? Like in Chongqing, they have a very booming EV industry. And some of these EVs are not even outside China. Okay. So I think people didn't understand how the ground mechanism, the ground economy, and that will continue to, I think, support and underpin some level of consumer spending going forward.
Nice. Very interesting. Okay. So one last question. I know I say last question 3 times already. Right?
We don't believe you anymore.
Okay, last question, right? Because I think for a lot of Singaporeans, it's not just about investing in the Chinese market, but also trying to figure out like the RMB, like where is the RMB gonna move? Like what's the situation? Like what is the future of the renminbi, right? So just if you have a comment, please share. If you don't have, it's fine. But any thoughts around like where do you think the RMB is gonna move towards?
It's a tough question. Yeah. There's so many factors driving it. Of course. Yeah. So interest rate is one.
Easy question. I won't ask one. Why bother?
Exactly. Right. So
that's why last. This one you
have to ask the Minister of Finance in China. Or the central bank, PBOC, right? Nobody knows what they do.
Yeah. Okay. Fair.
But weaker renminbi is good for Singapore consumers. Please go and spend money in China.
I do have a colleague who went to China a few times in the last few months. Yeah, she's saying they're very cheap.
Yeah.
It's a lot cheaper compared to other Asian countries.
Yeah, so it's time to go China and spend.
Cheaper than Japan, definitely.
No, and to be fair, China also got Yinghua, They also got matcha. It's all in the same
Oh,
belt.
in Kunming, you must go to Kunming. It's so nice.
Yunnan
all the
is the
flowers.
travel city
Yes,
of China.
correct,
Yes,
yeah.
yes. Dali, Lijiang, Xishuang, Banna, everywhere, right?
Yeah.
So yeah. It's a lovely place. Yeah. You can visit Halong Bay also. Just saying, it's one group one all the way to Vietnam. So yes, I hope you guys enjoy yourself. You learn something interesting. If you have any specific questions, you can reach out to them. If our audience would like to connect with you, how can they reach out to you?
Okay, for us it's very easy. You can go to our website. We have an IR email address. You can just email into that.
Yeah,
address.
the IR very active one. Yes.
More to come. Watch this space.
Yeah.
I mean, same for us. Just go to doctorwealth.com. You can join our newsletter and you can always contact us by replying the email.
Nice. Okay, thank you guys. Thank you for your
Thanks,
time.
Reggie,
Hope
for
you had
having
fun.
me. It's been
Thank
great
you.
fun speaking with Alvin.
Awesome.
Yeah.
Nice. And that's a wrap.